Will Budget 2016 help India move closer to GST? Does that mean a change in some tax thresholds and rates? What about exemptions? Will Budget 2016 herald the big indirect tax reset? To answer those many questions, I have with me today on the second of our pre-budget tax series, three indirect tax experts, Rohan Shah, Sachin, Menon and Harishanker Subramaniam. And gentlemen, to all three of you, a very warm welcome. I'd like to start, Rohan, by talking a little bit about the indirect tax collections we've seen in the fiscal so far. And in fact, the projected collections for the fiscal was 6.5 lakh crore rupees. But we have the Finance Ministry tell us they're going to do better than that, thanks to the big mop-up on the excise duty front on oil. So I think about a 40,000 crore rupees extra. What do you make of where we are in those targets, and what kind of targets do you expect in the year to come?
So obviously that's a good sign, and to me the most important sign there is not the numbers but the factor that moment you have higher indirect tax contributions, there's something robust happening in the economy.
But these are higher because of the excise duty on fuel, otherwise they wouldn't be.
Yeah, but you're not seeing a sort of falling off. There is an impact on petroleum and fuel, but you're seeing other parts of the economy also kick in and contribute, because if they weren't, you would have had some shortfalls. Okay. So from my perspective, you're seeing whether it's all of the announcements or whether it's just the general buoyancy, the fact that industry is working, the economy is working, is part of the reason that you're sort of going to get to this. Going into the next year, I think this is a year of transition. I don't know what sort of numbers they will set, but clearly both for direct and indirect tax, it's a year of transition. And from that perspective, if they have to ultimately move to GST and then to move to the corporate rates they want, I think they'll have to be a little more measured in their ambition for tax, because in a transition, things will in that manner be a little more uncertain. And I think they should factor that in.
Okay. Hari, what kind of targets should we be looking out for in the budget speech for indirect tax, given that we are also intending to move to GST this year, hopefully?
See, the buoyancy that we saw this year, I don't think is going to be there to that extent next year. And also you correctly spoke about the extra 40,000 crores that they raised on excise as far as those petroleum goods are concerned. Well, there will be some degree of improvement, but I don't think the numbers, in my view, will be more than 15–16% growth, because unless they do some rate increase or rate tinkering, which is also expected. So fundamentally, I think they need to be a little bit more cautious on those numbers for next year, because this amount of buoyancy that they had this year, after a long time, Menaka will be meeting budget revised estimates. I think they need to be careful. But the challenge that they have is they also will have a difficult fiscal deficit to manage next year. So it's going to be interesting to see what's the growth numbers on indirect tax.
So do you have a number? This year's projected collections was 6.5 lakh crore rupees. Should we expect a 10 to 15% extra when they put down the number for the next fiscal?
In my view, they will definitely do 15 plus, because they're not going to meet the fisc next year at 3.5 with all the pay commission, OROP, food security and bank capitalization. So I think they will have a number of 15 and upwards, and that's where they need to be cautious.
Okay, I think that leads us to the question, Sachin, that if we're looking at a 15% sort of increased target for the next fiscal, if you agree with that, then what does this mean for how we progress rates in this budget towards the GST rates, assuming that, what the chief economic advisor said about the standard rate being somewhere at 18% is what finally happens?
Well, this brings us to the older debate to say that when the economy is predicted to grow by 7 to 8%, you expect a tax growth of 15% or 20%, even more for that matter.
So you're saying 15 or 20% would be unrealistic?
So it's all depend upon how best you have got the arms around the current tax structure and the compliance mechanism. So if you look at the buoyancy in the revenue which you are seeing now, one is contributing towards the petroleum, and you also should not forget that last year the service tax rate has gone up from 12 to 14.6, 14.5%.
Right.
And it is expected that this year that rate will further go up to 16%, which is contributing 1.5% more. And that definitely going to increase the tax collection, given the fact that from the GDP, the contribution from service sector is almost 60%. So therefore, the revenue growth is not only contributing because of better compliance, but also tax rate increase.
So you're saying the 15, you agree with the 15% rate, even though
So
it's an aggressive
given
number,
that if you look at,
but you're saying to achieve that, we will need a service tax hike,
Right.
hike
So
of 16, up to 16%.
given that you have growth prediction of 8%, so tax also should accordingly grow. Plus you have almost 2% increase in the the rate in services, which also going to be contributing. So growth could be anything between 10 to 15% could be realistic according to me.
Okay, what rates are going to change as we move towards GST besides the 2% increase in service tax? So some people say, will they go all the way up to 18 in this budget itself? So.
Yeah. So I think expectedly there will be a move in terms of service tax. I don't think you have very much in terms of play under customs because of the factor that you have a set of bound rates and you've set a set of rates to be WTO compliant. Then looking at what you can do in terms of the manufacturing sector. The other part of what you could do is the exemptions.
But in manufacturing, what do you expect excise to move in any fashion?
To my mind, if you're going to sort of move your excise, and again, I can't see that as being a significant move. So if service tax also moves probably 1 or 2%, I don't see them taking the whole leap to 18. Even in terms of excise, you'll have to attune it because I don't think a general rate increase is going to work because there are other economic factors you have to consider.
Right.
So you'll have to choose certain sectors, certain chapters and say, okay, this is where we can go higher.
So what do you expect in excise? Which ones do you think will actually see either an increase in rate or maybe even a reduction in rate to adjust to GST rates if required?
Look, I think you have your normal basket where, we believe there is inherent tax elasticity. All your sin goods or all of your superfluous consumption will come through. I think increasingly, even in the context of GST and even now in terms of excise, you will have to get to a basket of utilities. Things, the consumption of which matters to all sections of society. And I think over there is probably where you'll have the play. But if you see that in terms of food, clothing, etc., clothing as it is at this point in time in excise is 0. So either you continue that or you'll have to take it up. So I can't see a situation where there will be a very big change, and even if there is a change, they'll have to attune it to certain sectors, but you'll still have to take care of your utilities, because if that gets out of hand in terms of taxation, that's going to be difficult.
Okay.
The other one comment is, I am all for this whole situation of prediction and what numbers we'll set. But what that also does from our perspective is that the moment we administer tax by numbers, the sort of pressures that we create between January and March next year, and that could really be just the cusp of GST, I don't think that's another situation that you want.
Sachin, rates that need to get adjusted, not to meet revenue targets maybe, but to align themselves slowly with GST. Specifically, what rates do you expect will move?
So what is expected is that as of now, there are a lot of exemptions, concession which is given out to different industries, etc. And come GST, the exemptions, most of the exemptions are supposed to be disappearing.
Correct.
So if you do that at one go when GST is introduced, perhaps the negative impact of GST, whatever may be the extent it will be much more. Right? So maybe government would like to punctuate it in smaller doses.
So are there some exemptions that you think will fall off
It's already,
this budget?
you have seen that how pharma exemption has been withdrawn now.
Okay,
Bulk drugs as well as life-saving drugs. And if that is an indication, many of the exemptions is supposed to go. And when the exemptions are taken out, there has to be a balancing act. So we expect that those restrictions which is imposed on availability of VAT credit will go.
Okay.
And as a result, if you have to modify and the government has to ensure that the revenue they are not losing, the collection they are not, at least it is neutral, they may have to marginally punctuate the excise duty rate as well.
So to what?
Maybe 0.5%.
Higher.
Higher.
Okay.
So because at the end of the day, in the hands of an industry, it is a zero-sum game, because you have otherwise also actual excise tax could be 12.5% you're paying plus those restricted or denied credit.
Okay,
put
but
to
now
this.
that if the credits come back in, then you can afford to pay half a percent
So
more.
rather it could be transparent enough to give them full credit, and maybe even if it is going up a little bit higher, it is not impacting the industry because overall the tax impact will be the same.
Okay. Any specific industries where you expect that there will be a downward reduction of sorts in excise to align with GST?
If at all, it could be those goods which is related to infrastructure sector.
Why is that?
For
Do you
example,
think that
now
you base that on a GST
yeah, because see, for
convergence
example,
or
now
no?
if you see a road or port, etc., there is an exemption given from service tax. But the cement and steel, when you are looking at, maybe a CST if you are taking at, cement is attracting 12.5%, right? So, and then if you are paying that, there is no output CST. Anyway, you don't have the credit. As well as in excise scenario also, some of the cases where the roads which are subject to, is exempted from service tax, whatever revenue which is coming, a company which is running the infrastructure project, they may end up bearing the cost of excise duty, which is a cost to them.
Okay.
So if you have to stimulate them, then those sectors, perhaps you can look at government giving some kind of tax breaks for cement or steel kind of scenario.
Okay. Hari, what industries do you think will end up being impacted by budget 2016 from a change in indirect tax point of view? Sachin's pointed out infrastructure. Rohan's cautioned that in some industries, for instance, in clothing or textiles, if you attempt to move from 0% to whatever the GST rate is, you might end up having a negative impact on the industry at a time when the economy is not doing very well. Which industries should be on alert?
Before I get into industry, Menaka, what they will attempt to do is they'll try and do something which they would have done under GST as far as central GST is concerned. So fundamentally what they will try and do is that increase the base. They're going to look at thresholds, in my view, both under service tax and excise. Thresholds of service tax may go up to 2.5 million rupees because that has been the stated stand of center as far as GST is concerned. I probably feel they may even tweak the central excise threshold, which is today at 1.5 crores, they may bring it down. I'm even hearing things that if they bring it down by a pretty significant number, they may even come with something like a composition or a compounding scheme for the lower people to have ease of compliance.
Okay.
So that is a couple of things that they will do. Besides, even in excise, I don't know how much they will really tinker the excise rates. What I'm understanding is that there are several sectors where there are multiple excise rates. They may try and rationalize those rates into a two-rate structure, which is pretty aligned to what GST could be potentially. Yes, there would be rates which be higher than 20% in some of those sectors, but by and large, they're expected to come and rationalize some of those things. Also, to cushion, like what Sachin said, they will try and do some liberalization of the SENVAT credit rules, to basically so that there is no impact on the industry and it's just a pass-through. So that's another fact they will do. They will also try and prune exemptions both under excise and under service tax. In excise, if you really look at the entire GST exercise, there was nearly 300 lines of exemptions vis-a-vis just about 9,900 in VAT. I don't know whether they will do it in one go, but they will definitely do a hell of a lot of the exemptions will vanish. And like we saw the pharma exemptions vanishing, though 3 drugs were brought back under exemptions, we are going to see more of that action. Another fact that they will do, which they have been really asking us feedback from the industry, is what do they do to try and correct the benefit of an import versus make in India? And that is another angle they will try and do. So they will try and figure out and tweak those exemptions where an import becomes more expensive than manufacturing in India.
But then you've got international trade rules to comply with as well, right? When you attempt to do something like that, because that will be seen as protectionist in some fashion.
Correct, but as far as bound rates are concerned, it's only the basic custom duty bound rates. Even today, there are differential duties in several sectors, which are to some extent challengeable, but we still have them today, And that's another angle that they've been looking at because they've been seeking such feedback as to which are those areas which need incentivization to manufacture in India.
So which industries will get impacted if they were to do that, Hari? Would you say, pharma is one continuing impact. Do you see that all happening across the entire manufacturing chain or specific areas of manufacturing?
No, it may not happen in the entire manufacturing chain, but I know of sectors which have asked for some protection. In some sectors, those protections are already there. You might even see some of the tweaks in those protections because in some of those, you have differential duty today in telecom, as far as mobile phones are concerned, So tomorrow, I know at least the IT people are also asking for computers and so on and so forth.
Any more you would like to add to the list besides telecom that we might see this kind of impact on?
No, it could be even in computers, like I said. I know that the computer industry is asking for something similar to what the telecom mobile industry has as far as differential duties are concerned. So some of these things could happen. Some of these things could also see tweak in the existing exemption notifications, because more and more they are wanting to promote the concept of better value addition in India.
Okay, Rohan, what will the full picture look like then? I think we've got bits and pieces from all three of you. And I want you to also, I mean, when we talk of exemptions, there is the expectation that a whole host of direct tax exemptions will go away. For instance, those that benefit export-related industries, etc. And when those go away, some of the accompanying indirect tax benefits there will also go away. So it's not just exemptions on account of exemptions that will fall off on account of GST, exemptions that may fall off on account of a cleaning up of all the exemptions in the direct tax route. So what are we going to finally expect or look at when we look at this budget, given the GST backdrop and the economy backdrop?
Yeah. So, to my mind, while, we'll try and say A sector, B sector, this industry, that, I think it is really going to be much more in terms of a policy and a philosophy. If you're talking of fundamentally what a GST is, then, every transaction should be taxed. There should be a full flow through of the credits. And as far as you're concerned, if that is robust, then you can hope to have more benign rates. Now, therefore, at one level, in terms of the policy, they will have to look at what are the exemptions that they want to reduce. You look at what the chief economic advisor says, the 300 line items in excise vis-a-vis the 90 in CST. Plus, this situation of a 12% rate, that is really about putting as many utilities as you can. So what you're really going to see is reconcile the 300 with the 90, keep it to a bare minimum, and within that, what are the utilities. The other bit is going to be, yes, we do need to attune rates to finally go to the revenue neutral, but we will get rid of exemptions. And from the perspective of the whole credit mechanism, you have to ensure it's as robust as possible. So if these are the three fundamentals that a GST has, then in terms of policy, you have to replicate as much of that as you can. Now, you may say, do I want to bring the de minimis rate also in line with what it will be in GST? Do I want to take other steps? And then, we get to all of the micromanagement in terms of if it is the sector which is infrastructure, then how do we take care of that? We know the steel industry is going through stress. How do we take care of that? So steel, cement. But I think that's really becomes a huge agenda. Okay. And from my perspective, if all of the fundamental principles of what will support a GST are reaffirmed, and we see a move in that direction, great.
Which means no big changes in headline rates except for service tax. No,
you might see a little bit of a tuning of rates, but if I'm looking at this budget, I'm not going to be really looking at, did this go up 1%, did this go up 2%. If as part of the philosophy that you want to move to a revenue neutral rate, you do it, to me it's another act of affirmation. And coming to your issue in terms of direct tax and the correlation to indirect tax, I mean, you have SEZs out there.
Right.
You really have to take a judgment call. Do I want to compete with China? Do I want these clusters to be completely free of tax? Or are they part of the tax mainstream? But what we've done is sent out a suggestion that, these are supposed to be tax-free. And then from time to time at a whim and a fancy, we keep changing things around. So my situation is, you're going to take this away from SEZs, you may as well say you don't have SEZs. So really, I'm not so much into the minutiae A, B, C rate, but are the fundamental principles flowing through? Because if they are, then we are really in transition mode. If we are still doing a series of patchwork by item and chapter,
okay, so when you say fundamental principles, you're looking for stability in basic in headline rates. You're looking for a careful pruning of exemptions as we move towards GST, and you're looking for no tinkering on the minutiae part, as you call it. Is industry ko ye chahiye, thoda bada do. Is industry ko ye chahiye, thoda ghata do. Because that will seem as if we're not really down the road to GST.
And I'm saying some of that you may need. It's the need of the hour. You need to look after steel. You will. All I'm saying is the four fundamental principles. Are you moving to revenue neutral rate? Have you got your exemptions down to a bare minimum? Is your entire credit mechanism robust? And to the extent that you need to look after some goods because they are important to the consumption pattern, how are you going to protect those? And if you address these four, then I think you'd have achieved a lot. I think too much conversation in terms of this line item and that, I don't know if they really have the capacity for that.
I want to get Hari in with what he expects will be the other changes in this budget. Hari, anything on service tax related arrests? We've seen a spate of them. Anything on reducing litigation in the indirect tax space?
Well, litigation can reduce only when you have a law which is simple and easy to interpret.
Okay, fine. So what do you expect? Can you very briefly in 20 seconds tell me what you're expecting besides all these rate changes?
No, simply I am expecting a budget from an indirect tax perspective which is directionally moving towards what we intend to do in GST.
Okay.
GST may be some time away, but as long as they are directionally there, a tweak, few tweaks here and there sector-wise really doesn't matter. It should be directionally towards GST.
Okay. Rohan, last word.
Two things, right? One is you have an interest rate of 30%, 18 to 30%, which I think is just unimaginable in any context. And given that, you have disputes at the level you do, I think that's one thing he has to look at.
Okay.
The other situation is penalties. They go from 10% up to 100% in exceptional cases, even beyond that. I think that's the other thing he has to look at. The other thing that I'm seeing is this thrust on saying, let's get rid of litigation. I don't know. I have a sneaking suspicion we're probably going to see another Kar Vivad type of situation. Something to just en masse try and get rid of as much litigation as you can at one go before you get into the GST.
Both are points that were made by Hasmukh Adhia when he spoke about what to expect in the budget. He did stress on reducing litigation. He spoke of very high penalty rates and said maybe that needs to be fixed. And I think he did speak of finding some sort of dispute resolution mechanism that allows for us to deal with pendency. Gentlemen, to all three of you, thank you very much for joining us. And that's it on this show. We'll be back next week with the finale in this series.